Hi everyone, welcome to the channel. Today we are going to briefly analyze General Electric. First we are going to check the dividend score, and after that we'll check the valuation with the help of fast graphs. They have a market cap of $79 billion, the current stock price is 72.08 and they operate in the specialty industrial machinery industry. During the last 10 years, they have actually gone down in price. So if you invested $10,000 10 years ago, you would have $5,814 left with your dividends reinvested. Let's check some financial data. A negative sales growth of minus 9.1%. And the earnings growth is also negative, almost 20% annually. The earnings estimates forward though is expected to be 45.9%. The return of capital is also negative, minus 2.76%. And the debt compared to the free cash flow they are generating is 9.34 years. Let's see if the yield numbers is better. The dividend yield is low, 0.44%. The buyback yield is actually negative, so they are not buying back any shares. The payout ratio is low though, 12.75%, but the dividend growth rate is negative, minus 46%, so they have been cutting their dividend lately. And thereby growth years, 0 years. Not a very good score, 2 out of 10 points only. Let's check the valuation to see if it's any better. Here in fast graphs we can see that the earnings is extremely cyclical, but unfortunately cyclical downwards. They had a negative earnings growth of minus 5% during this 15-year period. And if we plot the price and the normal PE which the stock is trading at, we can see though that if we project out to late 2024, you could actually look at the total annual rate of return of 22.4%. But please beware, people have lost a lot of money on this stock, so this is a bit of a turnaround case. But yeah, the valuation looks okay. That was it for General Electrics. Please leave a comment what you think about the company, and also check out this last video I did about 5 undervalued stocks for September. Have a nice day. See ya!